What's up, everybody? Welcome back to Earn It, Save It, Invest It. This is my $100,000 challenge week 17 update. So I'm going to be breaking down all the stuff I've been doing, the performance of the portfolio. Did I make any sells? Did I make any buys? And how much do I feel this portfolio is going to really be pushing this year and over the time, because I'm actually outperforming what my projections were, right? What my goal was. So I'm outperforming it. So I'm going to break it down really quick. So if you guys like this stuff, please just give a like and subscribe. See, I'm getting it. Give a like and subscribe. And yeah, let's just break down this portfolio really quick. My $100,000 challenge, week 17. Here we go. So for the first slide I'm going to have, this is my portfolio that I have, right? Road to $100,000. Now, HIMS is a big player in my portfolio. If you see right here, it's at 25%. Now, if you have been following, which probably most of you haven't at this point, but if you have been following, it used to be at around 30%. So it dropped off about 5%, like that. And the reason is because, yes, I did actually sell some. I'm going to break down exactly how much and why I sold it, but I did sell some HIMS. It was continuing to push that 25 to 30% weight of my portfolio. And as much as I do think it's going to be a good gainer, it's going to continue to grow throughout the years, I just didn't feel comfortable having a 30% stake into HIMS, knowing that HIMS can just go down too. It can go down 30%. So I did sell some HIMS. I'll kind of go over that more. Then I have TQQQ, Celsius, Nike, Fubo, Meta, and Amazon. As you can see, they all performed not too great over this week, right? You can see right here, all of them are basically in the red, except for HIMS, which was at 1%. And then as you can see right here, my new cash balance is right here. I have $1,000 in cash, which is about 10% of my portfolio. So that's, definitely more than what I would recommend having. But I'm going to now start buying a little bit more aggressively. But I'm also, like I said, I've been feeling like a correction's coming. Now, you don't want to try to time the market, but I was selling the HIMS because I want to balance out my portfolio. I wasn't doing this solely off, a correction's coming, a crash is coming, let me load up on cash, let me sell my stocks. That's not why I was doing it. But I did build a little bit more of a cash balance and position size in the cash, right? To be ready for one to happen. So I think I went about 3 weeks without buying anything. And mostly I was buying Fubo at the time, and Fubo had kind of bounced around. It went up to $4.50, and then I think it went down to almost $4, but it's now up above. If I had just bought it over those 3 weeks, I would have bought Fubo at a lesser price than it is today. That's just the fact of the matter. So you could easily make the argument of you should have just been buying anyway. You should have been buying $50 of Fubo anyway, doesn't matter. But regardless, I did build the cash balance on my portfolio. And so now I'm sitting at about $1,000 at about 10% of my portfolio balance. So I'm okay with that for right now. As you can see, this was my performance this week. Right? This is like, it's always going to be this flat when you're only going over a 5-day period, right? But as you can see here, right, this was the beginning balance. I put in $50 like I do every single week, and then my investments turned out to be negative $130. That was not HIMS. I mean, it's including HIMS, but HIMS didn't go down at all. Those were the other stocks, and then so that brings my total. So I'm down a little bit for the week. As you can see here, this is a retirement account. I have multiple accounts, so it's not the only one, but this is a retirement account because, like I said, I plan to keep this in here for a very long time, and I plan to make a point about this. This is not like, you can also have different accounts. I have different accounts, you can have different accounts. This is an account to show longevity. I am 36 years old. I can't even touch this for another 25 years. You know what I mean? That's a long time. I mean, I can with penalties and taxes and all that stuff, right? But I'm just trying to prove a point that I'm going to build this on the side, and I'm building it with a slow portion, right? Anyone can do this on a regular portfolio, right? Any kind of account, brokerage account, individual account, whatever you want. But this is a retirement account that I am doing it on. This week I'm down negative 1.36%, which is the worst out of all the indexes. Again, the way my portfolio is built, it's just most likely going to either underperform or outperform in the sense of top or bottom, right? I'm either going to be at the very top and I'm outperforming everybody, or I'm underperforming everybody. And that's just kind of how it is, because I do have more growth, volatile type stocks that go up and down from the FUBO and the HIMSS, TQQ. These are the stocks that kind of make big moves faster than the indexes. So this is how it's going to be looking for probably forever. My moves are going to be a little bit bigger. Now this is starting from when I started the challenge, right? So I started at $7,354, and since then I have put in $850. My investments have gone up $1,358, so now I am at $9,563. So as you can see, there does become a point where the market's done well. Actually very well. It's done very well since I started this challenge, and it was coming back up from a pretty decent crash because it was more than 20%. So that being said, this will show you how much power it is just to contribute every single week. I've now contributed almost $1,000 over this time, which I'm about, you'd say like what, 35%, 40% less than my investment, right? I have put in that much less in, but that is still a significant amount, right? If I were, and I will go over how much my goal is supposed to be, but it's just a little bit over than what I have contributed over this time. So that's good, so it's like contributing every week plays a big part in this equation. That's what I'm trying to say, is just be consistent. Now, since I started this June 2nd, I am up 17.5% basically. I am just trailing the Russell 2000 and the NASDAQ. Again, NASDAQ, it just seems to get me. The Russell 2000 is surprising. The Russell 2000 running the way it's running is a little bit of a surprise, but also maybe not really, right? Everyone was assuming rates are going to be cut. And the small caps kind of run with when we have lower interest rates. So, Russell 2000 has beat me. Now, as you can see, again, I have bigger my volatility is way bigger, than the indexes, right? I'm up, down, I'm touching the bottoms and I'm touching the top right here of, whoever the best index is at that point, right? And then I touch the bottom, whoever's the worst bottom, the worst index, right? And then I go to the very top. Like, I'm constantly doing this, but that's just because, again, my portfolio has had more volatile stocks in it. This is HIMSS. This is it. Now, it evens out eventually at the end, right? It's all going to even out. But these swings, I don't necessarily need them or want them. I understand that if it's going to bring me money and gains, okay, fine, I'll take it. But HIMSS, 30% of my portfolio was just a little bit too much. So again, I've been doing pretty well since I have started this challenge. This week, I did not buy anything. I did sell HIMSS and HERS. I actually was going to buy some FUBO, and I didn't. I instead just bought, I just sold HIMSS. And I did this yesterday. I did this in the after hours too. So I was busy, had a busy week. I do a lot of stuff with my kids. I actually do a lot of schooling and stuff for my kids, with my kids. And I'm very involved. So I don't have a lot of time. I work full time. I'm video editor, Fox Sports. So there's a lot of things I'm doing. Regardless, there's no excuses to not constantly buy and invest every week. I could have it set up to where it buys $50 of FUBO every week. I could have it, and it already has it. So I'm already depositing $50 every week, right? But $50 of cash does nothing. I need to be investing that $50 too, right? So to have it on automatic, it's really good for someone who, like for me, I'm making these videos. I am involved in the market constantly. I'm always watching it, always involved. So I do know that eventually the $50 I didn't spend this week, I'm going to spend either next week or the week after, and I have a plan and something for it. Other people, they just forget. They just don't invest anymore. They forget about it. They don't want to. They do it for whatever it is, and that's what happens. But I didn't buy. I just sold the 10 shares of Hims at just under 60. It was 58.28. I did want to sell it at 60, but I think Monday is going to be a bad day. That's just my opinion. Doesn't mean that it's going to be, but the week was bad and Friday was good. So I just think Monday is also going to be bad. And I just think October is going to be a bad month. So I said, you know what? I have all these factors. I have a gut feeling about a slight correction from 7 to all the way up to 15%. I know it's kind of a wide range. I would even break it down to more of like a 9 to 12%. And Hims was making too much of my portfolio. It was just too much. It was 30% of my portfolio. Hims the PE is 93 now. Again, it's a growth stock. It has great margins and everything, so it could still continue to grow past that, of course. But one of my goals too, when it comes to investing, is when you put in money, when you invest into a company, eventually you want to take your initial capital, your initial investment out, so you can start placing that in other stocks, other bets, other investments. So I put in a total of $1,000 in Hims. I figured if I take out half of that, $500, right? It's a little bit more, but so now I'm actually, that's even better. I only sold 10 shares out of the 50. So I only sold 20% of the portfolio, or of that share balance, right? But I sold off 50% of my capital investment that I had initially put in. So I was able to get back 50% of my investment with only having to give back 20% of the stocks, right? So now I'm like, okay, so now I'm still in. I'm up, $1,800, and I still was up $1,800 before I pulled out the 500, right? So now, instead of being up $1,800 on a $1,000 investment, I'm up $1,800 on a $500 investment, right? So now I can take that $500, put it somewhere else. Now, of course, people can say, well, those 10 shares you had are going to compound into more, and it's going to build, and I totally get that. But the point is, if I can eventually have Hims completely riding for free, I mean, technically I could. If I had sold 7 more, something like that, 8 more or something, right? I could have a total of 30, a little bit over more, like 32 shares absolutely free. 32 shares of Hims, it's free. Whatever it ends up with now, that is free money. Whether it grows into a billion or it goes to zero, doesn't matter. All of that is just pure green, right? So that's kind of the goal, is to eventually be having these big positions of stocks where now even if it went to zero, I didn't technically lose anything. Of course, that's not how you want to see it, but I will have no more stake in that, even though I would have still a lot of value. I have no more stake, but I still have a lot of value. So that's what I'm trying to do. Hims, I do believe, is still going to grow. Eventually, I might be selling a little bit here and there if it continues to push, the balloon. If it goes back to 30%, okay, maybe I sell a couple more. It just depends on what happens. So that's that. For the my goals, right? These are my weekly goals, and I had put down 520 weeks because this is a challenge over 10 years. Oh my gosh, so long. I don't know if I can watch you for 10 years. I don't plan on anybody watching me for 10 straight years. This is more of an accountability thing for me. And just plus, I want to do this. I want to show people too, though, that it is possible. And then maybe in year 6, 7, 8, people are taking a little bit more notice. But right now, I'm only on week 17 out of week 520, right? 17 out of 520. But technically, my goal, if I want to get to about $100,000 at week 17, I should be at $8,679.97. I'm at $9,554.62. So I'm definitely beating what I should be at, right? My goal. Now, if you take away the gains that my investments have made, which was a little over 1,300, I'd be at $200. I'd be $400 less, right? Just $400 less. So that's because I've been putting in money. I'm not just hoping that my investments are going to make that 20% compounded annual growth rate that this is based on, basically, right? I think it's like like a little over 18%, really, but it's about 20% that I need to make. It's way easier and more possible to do that if I'm continuing to put in money. And eventually, hopefully on the shorter side, but eventually my $50 is going to do very little for the portfolio. Right now, if I have a $10,000 portfolio and I put in $50, that is putting in what, 5, that's not 5%, right? That's 0.5%, right? Something like that. Once I have $50,000, if I have $50,000 in this portfolio and I'm putting in $50 a week, that does nothing almost, right? It's almost going to do nothing. But it will continue to, I'll be able to have $200 a month to be building on a new position, to be building on a position that I already have that I believe is just going to continue to grow. So even though it seems small right now, and even though it's like, it's small right now, but it's playing a big impact, I know it's going to be even smaller later and play a less of an impact, but regardless, it's still going to play an impact. So again, the thing that I'm really trying to say right now is keep investing every single week. Just keep putting in some money, do something like that, because if you don't, it can come back and work against you a little bit. So I'm going to go over... Wait. Sorry, I'm still trying to figure this out. What is going on? Where's my Chrome? Oh, that's why. Okay. So, wait, why isn't it not? Okay, there we go. All right. So, the AAII in investor survey, right? I went over this a few videos ago. Hasn't gone up in the bullish side at all. It actually remained exactly the same, which is very, very interesting. What's going to happen? People became less bearish. What's interesting is that over the recent weeks, the more bullish people have gotten, like every time we got more bullish, it seemed like the market went down. When people got less bullish, like right here, more bearish and less bullish, the market actually went up that week. I don't know. It's just a little weird. Okay, now they have a new question. What do you think about the Federal Reserve decision to cut 25 percentage points? It was the right move. They should have cut by more. They should have left it unchanged. They should have raised it. And who's thinking they should have raised rates? Right move. I think it should have been 0.50. I think it should have been 50 basis points, but whatever. So that's what people are saying right now. So again, this is where the market is. It's very even, right? We got 41.5 about, we have 39 over here, then we have 19. People they don't know where to go. They don't know if they want to be bearish or bullish right now. I've also been saying this too. We are going to stay here in this neutral to green zone until we really get pushed. I don't think it's going to be like, oh, we kind of bounce here. No. When you start hitting fear, you really actually, it gets heavier. Just picture this in needle, right? And if it's going to be going this way, right? If it's going to be leaning towards fear, it's actually heavier. When it goes to the greed, it takes a little longer, blah, blah, blah. But when fear catches on quick, because people, even though people can get pretty greedy, there's still some skeptics and people, okay, well, wait, well, what? When people get fearful, people are just like, it's the end of the world. People are not really trying to cling on, well, guys, everything's going to be okay. There's a lot less positive outlook when we are fearful than there is fearful look when we are greedy, right? There will always be a fearful talk even when we are greedy, but there's sometimes no greedy talk when we are fearful. Like we're just absolutely So I just think that once we start hitting into the fear zone, it's going to really start increasing those chances of that correction coming that I've been talking about. Now, to quickly go over what my challenge is, it's a $100,000 challenge, week 17. And you might be saying like, okay, exactly how does this work? You're going to make $100,000 out of what's the math, right? It's all based on math. Now, if I were to take the $7,354, right? This is what I have. And I did it for 10 years and I did about 12%. This is about what the index will give you. I contribute $50 every week, compounded annually. I'm making about $68,000. I have about $68,000, right? I will have contributed just over $33,000 and I will have gained $35,000, right? So over the next 10 years at 12%, I'm essentially doubling my money. Now watch how fast it will grow for every percent. 13, 14, 15, 16, 17, 18. Like I said, it's just around 18. It's literally 18.1, and now I'm at $100,000. So you can see how much just some percentages can gain, right? That extra 6%, which is an extra 50%, right? If your gains are 12 and you boost that up by 6%, I mean, you're boosting your gains by 50%. But again, that 6% is big. So this is why I'm choosing individual stocks, because individual stocks have the highest chance of performing like that. Indexes, as much as they can be good, and a little bit safer, you could say, they have like a ceiling. They have a cap, right? And that's why they're safe, because there's also a ceiling or a floor for how far they can go down, in a way, right? But there is. So individual stocks, obviously I'm taking a little bit more risk, but I'm hoping that if I do my risk reward, correctly, then I will be coming out with rewards. So again, I need to make about 18.1% over the next 10 years to have $100,000. I think this is possible. I do understand a correction will happen. I totally understand a correction will happen. But you also have to understand that I will try to take opportunities in those corrections to help average down or to start a new position, to where now all that's going to do, like if you had bought during this latest correction or crash, you'd be up so much already, right? Now, it doesn't mean you're going to stay there. Maybe we have another little correction here and there, and then it kind of goes down. But whatever, I want to be buying an opportunity. So even though I do understand at some point my portfolio might go back to 7,000, it could go back to 7,000. I'm still planning on continuing to buy high quality stocks and to just continue to buy and to invest, right? Every single week, $50. Oh, like and subscribe. Every single week, the $50, and just take advantage of even the downtimes, because eventually, it's a V, right? I don't know if I'm doing it right. There we go. It's a V. Eventually these stocks that I had, that's like, oh my God, my portfolio is it's all going to come back up eventually. It will. It's during this time that I have to make sure I'm buying and not selling, and I'm taking advantage. That's going to make it worth it. That's actually the best time. It's going to be weird to say, but the times that your portfolio is going down are the times that you have the most advantage and opportunity to make your portfolio go up in the future, right? If it's starting to crash and things are going down, I guarantee you during COVID, that was a great opportunity to actually build your portfolio. I guarantee you in 2022, it was a great time to build your portfolio. When your portfolio is actually decreasing in value significantly, it is most likely a chance for you to build on top. Because if you want to just sell all that, and then it's not going to do anything. Just my opinion. So, if you guys like these videos, again, please give a like and subscribe. I really appreciate everyone who watches this. I'm on my way to make that $100,000. And I want to make it a lot more. I have other accounts, like I said, but this is one that I'm keeping on track. I want people to follow. And if you know of any stocks that could be home runs and stuff like that, I want to know. I want to put a couple hundred into a kind of a higher risk stock so that it can turn into something kind of big. So if you know of anything, please give a comment. Let me know what it is. And yeah, thank you for watching. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.